Welcome to readtheticker.com. Today we're going to combine a bit of value investing with Wyckoff logic. Now we all know value investing is determining a value of a company or a service or a commodity or what have you, and trying to buy it under that value. You might have a company worth on the market cap of $2, but the book value is 1, so that's overvalued, and you really want to buy the company below book value. Or you might be looking at oil, and you might be looking at copper, and you believe the value might be of production or cost might be at a different value. So you really want to take into consideration the true value of something, and you want to time the market. The best way to time the market is using Wyckoff logic, because the Wyckoff logic helps you analyze whether other people are also getting into the market. What I mean by that is there's accumulation phase going on. I'm a retail investor. My pockets aren't that large. I've got to be able to read the accumulation, see that I'm not going to be first in, wait till there's some accumulation, and also wait for a change in behaviour that the price is actually going to go up. So yes, I look for undervalued stocks or commodities, and then I'll wait for other people, the big guys, to get in and start accumulating it, then give me a chance to see that the change behaviours, and then it's going to be able to move up where you can either execute a directional play or sell premium or do whatever. So once you've determined whether there's value to be found in something that is it's on sale, then you have to apply Wyckoff logic. For example, I'm looking at a symbol called SSRI, Silver Standard Resource. I like the look of the company. Obviously it's undervalued, but as silver has fallen, I think 60% or something, the stock has been suffered in a bear market. But what I notice is that I'm not the first one to see the value in this company, as I can see some accumulation going on here. For example, I see my preliminary demand here. I see a selling climax with my high volume there. My automatic reaction as the shorts cover. Now, as the shorts piled on, more shorts piled on, got a secondary test that tested the selling climax. That all works. That was phase A. Now we're into phase B. Phase B is the period of accumulation. We actually have some strength up to resistance twice, 2 signs of strength. And then we got the mighty thump it down to try and bust out the weak hands. Bit of a pause here, but then we rush down to support to really bust those stops. And for all those weak hands who can't handle it, they're out by now. Only the big players and the strong hands are in. Now we're hopefully entering phase C. We've had a bit of a spring here. As you can see, entered new ground. Entered new ground. The volume wasn't that great, so that's quite safe. The larger the volume on a spring, the more that it requires a test. So I'm looking at the spring and going, yeah, the volume was high, but not that bad. We've got some strength here. So we've got some strength to break over that previous resistance line here. So we've got a good close in the week. I really want to see that strength continue up to 6.57 and maybe break out. Then I know that we are on a change of behaviour to try and get this thing up to $10 or beyond. Now Wyckoff has a couple of entry zones. We have a little symbol here. Entry zones there can be an E1 type of entry. E1 is like just after spring. You got E2 and E3. E2 is on the breakout, and E3 is on the pullback after the breakout. So E2 is like when it jumps over the creek. You got a chance there, and E3 is after it jumps over the creek to come back to the test. So the E1 and E2 and E3 are nibble zones. I would think E3 is where you actually pile on because you know you've got a sign of strength behind you. It's done its test and it's going up higher. But at the moment we've got a bit of a spring going on, and you could allocate or start accumulating 2 or 3% of this, and maybe if it gets a bit higher, another 2%, and really show some strength, it might add another 5%. Scrolling down the chart, we see the red bar made a new 1-year low after just made a 1-year low after making a 2-year high. So that's what the green means, 2-year high, red means 2-year low. Looking at the waves, yeah, okay. Some volume coming in. Here's a pointed figure chart. As you can see here, this last accumulation, the target was down here. It was well met. So now, once the pointed figure forecast has been achieved. We're looking for action in the zone where it's achieved for reversal or continuation. I'm actually seeing some reversal signs here. And you can obviously see the large volume coming, all this volume's coming down the bottom here, and it's not going lower. So that's slowing the trend. That is effort versus results. So there's lots of effort going in, but it's not going down, so it's got to be buying. It's got to be accumulation. After this bar here, this long bar here, there's massive volume on that bar down, and it has failed to make new lows. So definitely buying, more buying than selling going on. Once again, like I've got this green indicator here is my stepping indicator. I like to see, I'll explain what I mean by stepping. Oops, wrong one. Shoot straight, here we go. You've got your steps, you want to see price action, resistance, support, slowly climb the steps. But the indicator we use at RTT is this RTT steps. And as you can see, there's no steps climbing. We've just got a little bend here, so really we want to get price above $5.50, $6. It's starting to show the steps, and the steps start working. Start looking like steps. Simple as that. And here's my step indicator for the bearish. As you can see, it's stepping down nicely. We've had a few challenges to the steps, but what we want to see now is a challenge that works. It gets up here at 650, does another step, and get above the $8. So the idea of the Wyckoff logic is don't be first in, let the big boys do the base work, read the big boys, or the composite man I should say, accumulation, wait for the change of behaviour, and like any surfer, ride that wave when the breaks start. You don't ride a wave before it's broken, you've got to let the wave build up, and once the wave peaks and starts to break, that's when you ride it. So at the moment we're hoping the wave builds up here with a bit of a change of behaviour, and the wave starts to peak and starts to get some strength and starts to break. That's when we ride it to the beach. So I hope you understand that. So once again, we're entering the exciting phase C of SSRI, a silver stock. Let's see how it goes. Thanks for watching.